Right, good morning, everyone. Welcome to this Gravita webinar today on the taxation of entertainers, artists, and social media influencers. I'm Tim Palmer. I lecture around the UK. I really do. I've been doing that for about 35, 40 years now. Tomorrow I'm lecturing in London and then all over the country for the rest of the week. But I enjoy it and I find tax fascinating and I'm very sad. But as well as my lecturing, I'm really proud that I'm a tax consultant with Gravita, Chartered Accountants in London. We've recently moved offices. We're now in Aldgate Tower and I go there quite a lot. I love it there. I think the views there are fantastic. And I think there's a real feel-good factor around the new Gravita offices. Gravita is a pretty dynamic and rapidly growing top 30 firm. A lot of staff, we do so many different things. Can you believe that even though the whole of my career really I'm in tax, I've started to get involved in audit matters, which I'm really thoroughly enjoying now with Bashir Khan and Charlotte to back me up. And so it's quite fascinating, but tax is my thing. And before I start today's webinar on actors and actresses and social media influencers, can I just remind you that Gravita does a tax consultancy service to the profession, which we've been doing for a while now, and it's very successful. We've had huge compliments about it. People have used us to get them out of problems, to do their planning, to sort out investigations. And the sort of areas that Gravita's tax team can help you with, I mean, there's so many, but can I perhaps just name 4 or 5? R&D, we've got a big R&D team, probably one of the best in the country, and we can help you with R&D. Dion can help you with the tax investigations. I work closely with him and have done for a few years now. I think he's excellent. We've got a very good team on inheritance tax and also succession planning. You know, I could go on about this for another 20 minutes, but I'll add to that list employee ownership trust, which Thomas Adcock is doing a webinar on. I'll give you details of that at the end. And I don't feel people use EOTs, employee ownership trusts, enough, actually. I really don't. And they're incredible. You know, if you haven't got children to leave your business, you want to sell the business to the workforce, you should use an employee ownership trust. We can really help you with that. Tom and I did a webinar on employee ownership trusts earlier this year, and we really did help a lot of people sell their businesses. We set up EOTs for them. You should watch the webinar that's coming up in a few months' time. I'll give you details of that at the end, but that's really important. Our tax team are here to help you, and we really can. Capital allowances, Tom's brilliant in that area, and there's so many more things that we can help you with if you get in touch with us. Today's topic is the taxation of entertainers, artists, and social media influencers. My thoughts on that are that these guys, from a tax point of view, need help. They don't always keep their records as well as they should do. Social media influencers that I've witnessed, and I'm very involved with them, they've received nudge letters from HMRC saying, you know, obviously not our clients, but other accountants have told me that they've had nudge letters, the social media influencers. Why haven't you registered for self-assessment? Why haven't you registered for VAT? There's a lot going on with these people in these areas. Can you claim certain bits of expenditure? I saw the Cannes Film Festival, people arriving. Me and my wife were watching it on TV. And Bhavna said to me, she can claim that dress. You know, from a tax point of view, I wonder how many couples watch the TV and talk about the tax consequences, but it's always something that me and my wife, who's a qualified tax advisor, we both are. It's something that we discuss over our Sunday lunches at our local pub. That's very sad, isn't it? So we're going to run for approximately an hour today, and we'll finish just before 10 o'clock. I trust you've all got a set of these notes. If you haven't, Hillary, who's excellent, who backs me up with these webinars, She can supply you with the notes. You want to have them in front of you today. But I'm going to do something slightly different today. I'm going to tell you at the start of 7 or 8 key things that you need to be aware of with actors, actresses, and social media influencers. If you have any questions on anything I'm saying today, reach out to Thomas Adcock, who's excellent, and our tax team. Okay, we'd like to hear from you. So if you've got a query, can this actress claim this? Can this actor claim that? When is the social media influencer, when officially has he started or she started to trade? We can help you with all of these things. And in a minute, I'm going to give you, not even in the notes, 7 or 8 key things perhaps you want to jot down and think about regarding entertainers and social media influencers. All right. So reach out to us. I think the focal point today is Hillary for any admin needs. If you haven't got a copy of the notes, I'm sure you now have, and perhaps a couple of other things. Hillary can support you out with the admin and the tax technical side of today. Thomas Adcock and his team will be delighted to help you. You might want to jot down Tom's email address from the slide now. Okay. So it's going to be slightly different today. We've got a limited time available, and what I'm going to do at the very start, you won't need the notes at the very start. You just need a pen perhaps to jot things down. I'm going to give you 8 questions, and hopefully I'm going to answer them, that people have asked me recently on entertainers and social media influencers. So slightly different, a different approach today. It's Monday morning. The football season is more or less finished. My team, Tottenham, should have got 4th. We were 5th. We got Europa football instead of Champions League, which we should have got. I disagree with the Spurs fans who wanted Spurs to lose midweek. I thought it was a dreadful thing to say. We should have beaten Manchester City and got a Champions League place, but that's besides the point. Nothing to do with today. But fresh week now, and this webinar is being recorded today. Okay, so quite often I watch webinars from other people, really high-level webinars, and I sign up for them like you're doing today. And what I do, most webinars now, they say to you, this will be recorded and it'll be available within 24 hours, etc., etc. And I welcome that. I'm going to relax this morning. I'm going to tell you things I'm doing, have done, and hopefully this will be a little bit of guidance for you and things perhaps you can take on board yourself. I do watch webinars. I do an awful lot of tax studying. I get 2 or 3 magazines every week. Every day I watch 2 or 3 webinars, websites to see the latest tax news every day. I do that. And when I watch a webinar, I'm very keen to go back and watch the recording, because when you watch the recording of a webinar, particularly a very technical one, there'll be things that you didn't spot first time round, but then you do spot the second time round. So I'm a big fan of watching it live and watching the recording. I think that's how things have progressed since COVID, when everybody built in webinars as well as live lectures. Live lectures are now increasing again. Half of my week, every week now, is live lectures and the webinars, but I think it's nice to have a nice mix. So Hillary will sort you out with a recording, and you can watch that back at your leisure after today. Right, okay, so these 8 questions. Right, you've got a pen, you can jot them down, you can watch the recording and watch them back. These are not in the notes, they're not anywhere, but I decided yesterday when I was preparing for this webinar that I would just do 8 quick questions at the start, but they're important. Right, question 1. What areas of expenditure can a self-employed actress claim or not claim? This is question 1. What areas of expenditure can an self-employed actress claim or not claim? Well, if you got today's notes, don't turn to them now. If you got today's notes, there's a whole list in there of various items that people can claim, can't claim, and we'll quickly go back to them later on. So that's a very useful port of call. You know, when you watch webinars, hopefully, I don't think people give you as detailed notes as I do, but I always do, because I try and help people when we do these webinars. So you want to download the webinar notes and have a look at them after the webinar today. And there's a list of things there that I think actresses and actors can claim and that they can't claim. And you can carefully go through them. But the question that I get asked more often than not, regularly, is if an actress is attending a big ceremony. I mean, yesterday you had the Cannes ceremony, and you saw a few English actresses, quite a few, in incredible dresses. And my wife said to me, she can claim that. And I said, yes, she can. So this is question number one. A very well-known actress goes to an awards ceremony in an incredible dress that has been designed exclusively for her appearance at the ceremony. Do you know, whenever somebody says that to me, I think of Liz Hurley and her dress with all the safety pins. That was an incredible dress that caused a lot of publicity for her, but she only wore it once that day, that event, that ceremony, and she could claim that. I honestly think that, because it's wholly and exclusively for her trade. She's never worn the dress before, and she's never worn it again. I mean, that was in the 80s, I think. But I've followed that through ever since. The dress, in my opinion, is allowable. But, you know, it's all about how you present your case if the revenue inquire into it, and they did. A few years ago, before I got involved with ABG, which is now taken over by Gravita, in my previous firm, or one of my previous firms, we made a big claim for an actress who you'd all know had this incredible dress at a ceremony, and the revenue rejected it, which I couldn't believe. I thought, this is just ridiculous. She's only worn it for the ceremony. It's cost her thousands, and she actually had to change into it in a nearby hotel. We got all the details of that, and we said we're not giving up on this. So the revenue requested a meeting, which I was delighted to go to, because I back myself. If I'm really confident about something, if you give me a meeting, I can perform well there, hopefully, and get my point across to the revenue. There was two of us, me and somebody else, and we did this incredible presentation and we won it. Now, I'm not going to guarantee that every single time, but I do feel quite strongly that, I mean, just purely hypothetically, Emma Stone, if you Google Emma Stone and her dresses that she wears at all these award ceremonies, she can claim them. I'm really confident about that, because they're only for that ceremony. She'll only wear them once. Surely that's holding exclusively for the purposes of the trade. That's my opinion. Right, I did say there's 8, but I'm, you know, very conscious of the time that's moving on already. So we'll try and whiz through these 8 very quickly, but you might want to jot them down or watch the recording. Question number 2, should a self-employed actress incorporate? Yeah, I think so. In many cases, Gravita at the moment are actually incorporating quite a few actors and actresses. We have to be careful. We have to go through all the tax implications, but we're doing it. And we're actually helping other accountants incorporate their celebrity and clients as well. And once you do that, obviously corporation tax is 25%. Now it went up 6% in 2023. Once you do that, then you've got to meet the actress or the client and consider a strategy. How much money do you want to get out of your company? When do you want to get it, etc., etc. And then you have to do quite a bit of planning, and you have to decide how frequently they want to get the money out of the company and the best way of doing it, which could be now probably a bonus rather than a dividend, because the tax on dividends is so expensive now, 39.35%, which I think is a dreadful rate. I hope you don't mind me giving my odd opinion this morning, but I think the tax on dividends now is very, very expensive, considering dividends are paid out of company profits that have already been charged a 25% corporation tax. And the dividend allowance, which was 5,000, then went down to 2, then 1, is currently 500. All of this I'm saying off the top of my head, because that's what I do. I do tax, and it's in there. So many times now, when celebrities and entertainers approach us and say, we want money out of our company for various reasons, we're taking bonuses rather than dividends. And the bonus obviously will give you the relief of corporate tax, and the national insurance is cheaper on the bonus. You want to buy software that gives you that calculation. I use a particular software, and it's very good, and it will do the calculations for me, the comparison between bonus and dividends. And then obviously you've got an actor or an actress, as well as the taking the money out with bonuses, they want to have tax efficient benefits in kind, which is for another day. I'm sure Gravita will do another webinar on that before the end of the year. But tax efficient benefits in kind, there are quite a few. I mean, very cheap electric company cars, all sorts of things, medical insurance. So there's a lot you can do, but I think a lot of actors and actresses currently are incorporating. Then we get the question 3, does incorporating bring you, the actress, into the realms of R35? Well, it could do, but if you're clever, it won't. If you plan accordingly, what we like to do is, if the actor or actress has got an invitation, they're about to sign a contract for a big engagement, we get involved before it's all signed. And if they're going to use their personal service company to bill the theatre company, to bill the film company, or whatever it is, you've got to get involved at the start, and you've got to make sure that the contract and the engagement terms are geared so there's no possibility that this could be subject to I-35, the attack on personal service companies. Can I remind you, because I know there's lots of different categories of people watching this webinar this morning, some are clients, some are tax consultants, etc., etc. Can I remind you that the IR35 attack is where an actress has formed a company and bills the theatre company or whatever through her company, and the revenue will attack it and say you only form that company to avoid being an employee of the film company, the theatre production company, whatever. You've got to prove that if she didn't have the protection of her company, she would be genuinely self-employed. The best case, I think, that I've ever seen on I-35 and how they defended and how they won was Adrian Charles. You will recognize him if you Google him. I probably haven't pronounced his name correctly, but he had this company, Basic Broadcasting, and through it, he billed for his appearances on ITV as a sports presenter, and then BBC. And then he did radio shows, and he wrote books. I think he wrote a book about following West Bromwich Albion Football Club. And he wrote a book about, can you believe, how to be a good drinker. He has radio shows, all sorts of things, so many different things. He has an agent. He's in business, and he won. And the judge said, Mr. Charles is in business on his own account. And I followed that case very closely. And I think that's been one of the best cases where the taxpayer really deserved to win and defeat I-35. And everything that Adrian Charles was doing, arguing, is what we've done in the past. And we won, and he won, so that's good. Right, okay. Question 4. So this is 8 quick questions on actors, actresses, social media influencers. And this is like a tax update, if you like, on what's going on in the profession at the moment. Question 4, are HMRC currently attacking with IR35 well-known celebrities who appear in pantomime at Christmas time and bill the theatre company via their own personal service company? Yes, they are. I go socially to, and I meet accountants, I'm on committees, and I hear what's going on. And a few times recently, I've heard accountants say, we've had an attack on one of our TV celebrity clients who's appeared in pantomime, and he's billed, or she's billed the pantomime, the theatre company through their personal service company, which a lot of people appearing in pantomime do. I love the pantomime season. Oh, no, I don't. Oh, yes, I do. No, I love it. And me and Barv, for the first time last year, we went to pantomime at Wickham Swan without our kids. And I was thinking, this is going to be a bit weird. You know, suddenly, as your kids get older, you do things as a couple without them. And it does seem strange for the first time. You go on holiday for the first time without your kids. It does seem strange. And we went to Wickham Swan. We saw this big, fun, really great pantomime. But, you know, I know this is dreadful. I should never admit it. But I'm watching the pantomime and the lead person there is quite well known. And I'm thinking, does she have a personal service company? Is she billing? Will she be subject to an R35 attack? Isn't that a dreadful thing to admit that you were thinking on Christmas Eve when we watched the pantomime? The only bad thing about that pantomime is we got soaked. I don't know if they knew me or what was going on, but in the middle, some of the cast who weren't on the particular stage at that point came around the audience. We're in the upper tier, we had beautiful seats, and they soaked us, which with their water pistols were all part of the show. I didn't think it was part of the show, but it was dreadful. But that's another story. Anyway, they are being attacked under R35. How do you defeat that? If you're acting for a celebrity who's doing pantomime and the revenue, say, well, you build for your personal service company, the theatre company controls you, you've got to put up arguments and you've got to have a very good contract to defeat it all. But the contract's got to tell the truth, and the contract's got to represent the reality of the position in practice. So can I be serious for a minute? This is an attack that's been going on for a few years now. We are aware of it, and at Gravita we could help you. And if your clients they'll shortly start signing their pantomime contracts, can you believe, in June for Christmas. But you need to be very careful with the contract. You need to be careful with the wording of it, and we can help you in that area. It's important to avoid an R35 attack on pantomimes if you prepare initially for the engagement and the contract prior to the signing, prior to everything. We could assist you in that area. Right, question 5. Are TV companies currently involved in tax disputes with the celebrities that regularly appear on their program? Yes, they are. We've seen since November last year, there seems a sudden worry by TV companies that, you know, they've had huge publicity about people getting caught to R35 who've appeared on their programs, and they've gone too far the other way now. And what I think is wrong technically from a tax point of view, the celebrities are appearing on lots of different shows, but quite a few shows say, well, if you're going to appear on our show from time to time, we're going to put you on a pay-as-you-earn contract, which is ridiculous. And I've seen, and you know, I'll be honest with you, one accountant I know very well is a good friend of mine who's shown me in confidence, he blanked out the names, but he showed me the situation. I said, well, that's wrong. I think that individual, she is not employed appearing on that program. She appears on lots of other programs. She appears on radio. She writes for a newspaper. I think this is very similar to the Adrian Charles case, where Adrian Charles was held to be effectively self-employed, and he was in business on his own account. He had an agent. She's got an agent. So I think the TV companies, a lot of them now, I hate to say this, but it's true, have gone the wrong way, and they're too obsessed with deducting pay as you earn. These TV celebrity won't want that, and as a result, they're not appearing on the shows and the programs. So I think, again, advice, and we could help you with this, is something that you need. I think it's wrong. I think if you really had somebody, an accountant who specialized on pay as you earn, is it employed or self-employed? I do, many people do. I've been doing this for 30 years. I can tell you when somebody's employed or self-employed, and a lot of these people that have been given employment contracts are not employees. So this is a big issue in TV at the moment. Right, okay, get in touch with these things. I'm sure people watching have got these types of disputes, and perhaps you know, you're not a specialist in this area and we can help you. We'd be delighted to help you. Right, 3 more questions. Question number 6. Will self-employed actors and actresses be affected by making tax digital for income tax self-assessment when it comes in from 6th of April 2026? Yes, they will be. Very much so. Right. But obviously, this only applies to self-employed people and rental landlords from 6th of April 2026. They'll be affected. And effectively, they're affected now. More on that in a minute. So, you know, we do have problems. Everybody as accountants has problems with actors and actresses, getting them to keep accurate records, getting them to claim everything, tell us about everything they're doing so we can make the appropriate claims. But making tax digital, when it comes in less than 2 years now, 6th of April 2026, I think you need to start preparing for it in 9 months' time. So it's quite soon. I think really you need to start thinking about it now. They'll be affected. And, you know, people watching this lecture, as some accountants, some clients, you might have small actors and actresses clients. If their turnover exceeds £50,000, they have to participate in making tax digital from 6th of April 26, and they have to prepare and submit electronically quarterly accounts to the revenue 1 month and 2 days from the end of each quarter, which is going to be quite a big thing for actors and actresses. Don't get me wrong. I've been involved in this for decades, and I think they're going to find this very difficult to comply with. I really do. But the thing you want to note now, if you act for a few smaller, and there are, you know, I know a very small actress who's not really doing that well at the moment, doesn't offer that much roles, she's not getting much income coming in. If her income exceeds £50,000, she actually rents out a property. So you've got to bring in rent. It's acting and actresses turnover for this particular area and rent. If the combined figure exceeds £50,000, but for 26-27, when it applies, you're basing that, can you believe, on the current year now, 24-25. So whatever your turnover is now, then if it exceeds 50,000, you've got to participate in making tax digital from 26-27. So it's very much in now. You need to take advice from Tom and the team on making tax digital now. And the worrying thing is the revenue just announced. When your turnover exceeds 50,000, you have to participate. You have to submit quarterly accounts to the revenue. I'm sure we'll be at Gravita doing a making tax digital webinar, perhaps before the end of the year as well, or early next year. But if your turnover drops and you drop below the required threshold, you still have to remain in making tax digital for a further 3 years. Right, question number 7. Time is really moving on. So can I now go to question 7, 2 to go, and then we'll turn to the notes for this morning. An older, very successful actor wants to start planning for succession. Do you remember the program Succession? My wife Bhavna was glued to that. I've never seen her so addicted to a program as that one. And MasterChef, she loves that. Angelica won it, didn't she? The celebrity one, fairly recent. But yeah, this older actor who's done really well, and he's got a lovely family, and he says, I want to plan for succession. And I actually met him, and it was charming to meet this guy. I wouldn't say he's my hero, but you'd all know. And he's appeared in so many films. He's getting very old now. But he said to me, I want to plan for succession. But he's got a younger wife, and his kids are younger. I'm not so sure that he fully approves of all their boyfriends and girlfriends and perhaps their fiancés. And he said, what do you think is the best thing to do? The best way for me to plan, but I want to be in control of things. And I like to give them income, but it's down to me and assets. And it's down to me. And I want, me and my wife, we want to know how and when to do it. Now, I don't know what happened, but I think in some sort of actors or actresses or entertainers magazine earlier this year, there was an article on family investment companies. And I think it appeared around Easter time. I may be wrong, but that's the feeling I get. I haven't seen it. But suddenly, after Easter, we started to get emails from the actors and actresses profession and a few social medias, but mainly actors and actresses because they've been around a lot longer, they're older. And they said, can you advise us about setting up a family investment company to give our wealth to our children and grandchildren? And we said, yes, of course we could. When I met Thomas Adcock about a year ago now, one of the first things that Tom said to me, he said that he was really starting to get involved with family investment companies. And he said how good they were from a planning point of view, for a succession point of view. And I agree with Tom, as I normally do. I agree wholeheartedly. And can I just say a few words on these? I have brought out a report on family investment companies, right? And if you look at the screen, if you want a copy of this report, email my colleague, who's excellent, Hilary Nunn, and she'll send you the report, all right? So if you want a copy of the report that I've sent out to actors and actresses on family investment companies, email Hilary, say, can we have a copy of the family investment company report that Tim mentioned, and she'll send it to you after this webinar. All right, right, let's go back to family investment companies. Quick word, perhaps from an actors and actresses point of view. They're brilliant, and you can do a lot of planning with them. You can create them. It's a very effective tax planning vehicle for succession, for keeping control of things, but then passing things to your children and grandchildren. It's mainly used for family succession planning. The advantage of a family investment company is that you transfer the assets into it, and then perhaps you have different classes of shares, and you give one class of shares that's income shares to your children. If you did that through a trust, you'd have an immediate inheritance tax liability at 20%. Whereas when you do gift the shares of a family investment company, the particular class to your children, it's a potentially exempt transfer. And if you survive 7 years, there's no IHT. The longer you survive, the lesser the IHT. Trusts, to me, are not quite so popular these days. And I think family investment companies have overtaken them and become incredibly popular. The founder shareholders will have different classes to the other family members. Look at the example. This is in my report. So you want to get a copy of my report, email Hilary and she'll send it to you. David has surplus cash of 10 million. He wants to distribute the 10 million between his 4 children. Oh, to be one of those children. But they're young. When you're young, you make mistakes. And he's a bit worried about their future spouses, fearful of giving cash away. Well, what he wants to do, if he does nothing, the beneficiary of his will will be the revenue, and they'll take 40%. You don't want that. So he sets up a family investment company. Look at the screen, and he's got the Class A voting shares. He makes all the decisions. The Class B non-voting shares can go to the kids, and that's a pet, and he survived 7 years. We love family investment companies. I was doing a lecture in-house to a big firm of accountants up north last week, and one of the partners comes up to me and he says, I've got a lot of interests as well as my profession and my partnership share. And he said, last year I formed a family investment company, and he said it was one of the best things that I ever did. Now, you've got to remember, I've only got a limited time with you this morning, and I could lecture for the remainder of this lecture on family investment companies. Get a copy of my report. If you email Hilary, she'll send it to you. And Tom and his team can really help you with family investment companies, particularly for the acting and actresses profession. All right. So much planning you can do, and you're in control of things, I think, when you have a family investment company. Right, and the last question before we'll turn to the notes. Last question, can social media influencers do some planning following the introduction of basis period reform? That was a question that I got sent to me last week, okay? And this accountant, he acts for a few social media influencers, and he said to me, from 6th of April, and that's already happened because today is the 20th of May, he said to me, all his social media influencer clients are now on the fiscal year basis, which is true. They're taxed on from 6th of April to the following 5th of April, the fiscal year basis from 6th of April 24. And he said, can we do some planning for them? And I said, yes, and I'll go through the planning now. But you really do need to appreciate, I'm sure you do, that actors, actresses, self-employed people, partnerships, they're all on now the fiscal year basis. When I started my career off in the 1950s, not quite the 1950s after the war, the 1970s, we had the preceding year basis, but it was 2 preceding years. So you were taxed on profits from 2 years in the past. Can you believe that was when I started in my tax career off in the 1970s? Now, in 2024, you are taxed on the profits of the fiscal year. You couldn't be more bang up to date. But there is a problem. And the problem is the year that's just finished that you're starting to do the tax returns for now. The year ended 5th of April 24. So just to recap, actors, self-employed actors and actresses and partnerships, they are now, from the year that we're in now, on the fiscal year basis, and they're taxed on their profits for the fiscal year 24-25. But the problem, I think, is the previous tax year, which is 23-24, and that's the transitional year that gets you onto the fiscal year basis. And we've inherited clients, and we do consultancy work for accountants, for other clients. We've got a 30th of April year end, which I think is a disaster. And if you've got a 30th of April year end for 23-24, you'd be taxed on 2 years. You'd be taxed on the year to 30th of April 23, 11/12ths of the year to 30th of April 24, less any overlap relief. So you are taxed on a lot more extra profits for 23-24. So what the revenue did, and I took part in the consultation, and the revenue do ask me questions and things. And I said, I think it's unfair that somebody in this transition to the fiscal year basis, an actress that we know, she will be taxed on 2 years' profits for 23-24. And the revenue listened to that, and they said, right, the extra taxable profits will spread over the next 5 years. So 23-24 in the next 4 years. And I thought that was very generous. So what accountants are now doing for the actors and actresses profession, self-employed people who haven't got 5th of April year ends, there's a lot of actresses and actors who haven't got 5th of April year ends. Unfortunately, quite a few have got 30th of April year ends. You're working out all the taxable profits to get you up to 5th of April 24, which is the transitional year. And then the extra profits that are taxable 23-24, the revenue is spreading, divide it by 5, i.e. 20%, and you'll be taxed on that a 5th in 23-24, and then the next 4 years. But I think in particular, social media influencers will need a bit of hand-holding here and a bit of help and planning for the future, but you should do that planning now. What do I mean? Well, if you've got a social media influencer and they hit the big time in 26-27, and they get a couple of brands that think this lady, this social media influencer, is brilliant, and we're going to pay her if she endorses our brands. And so she gets mega payments in 26-27, and she's been going a while, but she's not hit the big time. But she hits the big time in 26, 27. If you just are lazy, the revenue will spread the profits over the next 5 years, and you're pushing the untaxed profits into a future year where she, for the first time, is paying 45% tax. You don't want that. As an accountant, you've got to do your job and you've got to stop the spreading. So I think a lot of accountants for social media influencers who start to grow over the next few years, they'll make an election to stop the spreading and have stop some of it. You can do an election for any part of it you want, and they'll stop part or all of the spreading and have it taxed earlier in a year where that social media influencer who's self-employed was paying basic or 40% tax or a mixture of both. So I think really you want to make a note and plan for the future. The good tax advisors plan for the future now. And I think you've got to keep a note, particularly on social media influencers. You know, the better they do, the more followers they get, the brands will come after them. And in the years ahead, they'll say, right, we'll give you 20,000 here, give you more. If you push our products and our brands. And if they do that and they hit the big time in a couple of years' time, the spreading for them, if they've not got 5th of April year ends, pushes them into future years when they pay higher rates of tax. You want to make an election, which you can do, to stop the spreading or mitigate part of it. And at Gravita, we can help you with that. Right, okay, many considerations today and many things to think about, lots of things to think about. Contact us, reach out to us, and we'll be delighted to help you. Now, for the remaining time available, can you go to the notes? And these notes, I always write them. I do a lot of articles. Me and Tom, we write for Taxation magazine. We write quite frequently. I write even more. And I do every month articles for various publications and various tax organizations. And we do blogs. You want to keep in touch and look at Gravita's blogs on our website all the time. They're appearing. I think it's a good idea to follow what we do and keep an eye on what we do on Gravita's website. You should aim to do that once a fortnight, I think, because there's so many new things regularly there. But I would imagine that most of you watching today are fairly familiar with the things that an actor who's self-employed or an actress can claim. So if you go into the notes now for the remaining time that we've got available, and if we can quickly go down some deductions for self-employed actors and actresses. My problem with them is they don't keep good enough records of them. I'm being honest with you, a lot of them don't. You have to pester their agent, and sometimes the agent gets involved as well. And I think they miss out in claiming things that are allowable, that they could claim. For example, self-employed musicians, we have problems with them because we nag them and they don't like it. But it's important that they keep all the details of their studio time costs. And they keep really good records, and they're going to need to for making tax digital, as I told you earlier. They got to claim for all of this, and particularly their travel as well. They're traveling internationally. They want to keep all the records of that. Sometimes they have to send their equipment, transport it separately, and they really want to keep a record of that as well. And that's fully deductible, fully allowable. Their hotel expenses are allowable. There's certain things they can't claim, such as obviously the bar bill, which tends to be quite high, and newspapers and things like that. But the basic hotel bills, when they're performing abroad, they're allowable. If they have to research a part, they can claim all of that, and all the research normally into that area, they can claim. And their marketing, read the notes on all of this, and their studio and rehearsal space. And their performance costs. Do you know the one thing that I've seen a few revenue inquiries on in the last year is haircuts? Can you believe this? The revenue will allow you the cost of hairstyling for a particular show or a theatre production, but ongoing hairdressing to quote the revenue as a human cost, recurring hairdressing, and they're never going to allow it. They're a bit petty in some areas for actors and actresses. That's my view. Right. We also had a case about 2 years ago where an actor, he had glasses like I do, and the actor, like I do, he wore glasses, and he got successfully auditioned for a big role in a play in London, which I went to see with Bafna. We loved it. We went to see it twice, actually. It was so good. And he said to me beforehand, he said, my part, this role doesn't wear glasses. And I said, well, you'll have to get contacts. And he said, no, I hate contacts. So fiddly. And I said, well, there's no way around it. My daughter wears contact lenses. You'd never know. Younger people, they adapt to all these things, but I found them finicky and I don't like them. And so with much regret, he buys these contact lenses and he puts them in, and he said, this is for this show early, but the show went on for about 9 months when he was in it. And so he was wearing contact lenses, took them out straight away after the show at the theatre. We claimed for them. The revenue queried it. We won because it was holding exclusively for the purposes of his profession, for the show. I think if you present your case well, you win, hopefully. Also, letter writing to HMRC is very important as well. Sometimes I take hours over one small letter, but you've got to get the right input. We could help you, Gravita, with all of that. So we won the case. That's on the bottom of page 2. Clothing can be difficult. This is a murky area. If it's pure one-off clothing, only worn for that theatre role, you get that. But I think I'm not going to go into clothing in great detail today because it all depends quite honestly on the facts of the case and everything involved. I think we act for some classical musicians, and we've always claimed their dress suits and concert wear, and we've never had a query from the revenue for that. We've got that. Likewise, dancers, the dancing shoes, well, they're exclusive, really. They're the tap shoes. I always think of Lionel Blair, who I've met years ago. And but dance shoes, those types of things, the appropriate insurance. We've had one case many years ago where a pianist insured his fingers, and the revenue queried all of that. We got relief for that. So here at Gravita, we can help you. And if you've got any queries regarding what an actor or an actress can claim, contact us, reach out to us, and Tom and the team will be delighted to help you subsequent to this webinar. All right, leave you to look at all of that. Now, a few years ago, I never thought that me personally, that I would have to get involved with the tax on social media influencers, but they've been so common now. They really are common. And Gravita, we have for quite a few of them now, and we've become quite specialist. I think the problem with them is you've got to sort of distinguish, when are they trading? When are they started to trade? They've received nudge letters from the revenue, okay? And so you've got to be a bit careful with them now. And obviously, they're starting to receive brand payments. You've got quite detailed notes about them. But as a query sometimes that we do get on social media influencers, and I'm going to go down to it. It's on page 4. And if I can go down to it now, Alan, who's an accountant, he's got a social media influencer client, Susan, and she promotes holidays. She's very successful, has a huge following. And because she's good, and the holidays that she promotes on beautiful beaches, she promoted a holiday a while ago on Antigua. I've been to Antigua a few times with Bar. We love it there. The beach is wonderful. And one of my friends followed her recommendation, and they said it was their best ever holiday. So a lot of people, I think she puts a lot of research into what she's recommending. And this tiny company give her some nuggets and she promotes them. And in return, occasionally, they give her free holidays for her and her boyfriend. And she contacted us and she said, this free holiday that we get, is it taxable? And we said, no, it's not. If you go to the revenues manual, it's in your notes on page 4, BIM 40051, the holiday was non-transferable, could not be converted into cash, into money's worth, and therefore it's not a trading receipt. So you want to go to the revenues manual, circle the notes there, BIM 40051. And in that position, that to be taxable, the income's got to be in the form of money or money's worth. That's not. And it's not taxable. Right. But, you know, there are exceptions and perhaps we can help you out in that area accordingly. Right. Can I ask you to go to the notes now and go on a bit to page 7? And if you go to page 7, R35. Now, I've been involved in R35 since the year 2000, which is what, 24 years now, heavily. I've written many articles on it, many lectures on it. I've advised. I've been to the revenue on it quite a lot before I got involved with ABG and Gravita, and we won our cases on R35. I think the thing with R35 is you've got to have the engager, the TV company, the theatre company or whatever, and the actor who's got, or actress who's got, or the TV celebrity who's got a personal service company. And you've all got to get together and plan it out before you draw up the contract, before you sign. It's easy for me to say, but that's the ideal world. And you want to make sure that really that person, if they didn't have their company, if they were working direct for the TV company, they'd be self-employed. I-35 is defeatable. If you plan well enough in advance, and you've got a common goal between the payer and the person performing the services, you should win. Whenever anybody says to me, can you illustrate I-35? The loss and the win. The loss would be the Dave Clark case on page 7, which I hate to say, I always felt he was going to lose. Dave Clark was the darts presenter. When you mention Dave Clark, a lot of older delegates today will think of Dave Clark 5 and bits and pieces and glad all over. This wasn't the Dave Clark who was the drummer. This is Dave Clark who was the darts presenter. And I looked at his case and I'm thinking, all your income comes from Sky. You get a set payment every month, whether you do the work or not. You're under the control of Sky. There's no financial risk. This is like being a fixed term employee. And I always thought he was going to lose, and he did, and he never appealed. So all the details of the Dave Clark case are in your notes. And that really was a classic example, I think, of somebody, unfortunately, who was always going to lose on I-35. Right, well, what about a success story? Phil Thompson lost on page 9 as well. The success story, I met Phil Thompson on British Airways a few years ago now, quite a few years ago, but charming guy, but shame he lost his I-35 case, but I think he was always going to lose. What about a victory? Well, it's the case that I mentioned earlier, Adrian Charles. Now, Adrian Charles, if you Google him, you'll recognize him straight away. He was the guy a while ago that used to present, was the host of sport on ITV and BBC. But Adrian Charles has got this company, Basic Broadcasting. He's got an agent. And you have to say, fair play to him. He does so many different things, radio shows, TV shows, writes books, after dinner speaking, so many different things. He takes financial risks. He appears on small, I know all about him, small TV productions where there's a possibility he doesn't get paid. His agent does a good fee. He writes articles in newspapers. His books are very, I read the West Brom book, very good. You know, when he appears, I think really he does his own thing. I don't think there's much control over him. And I think it was right that he won his case on R35, very right. And the judge kept on saying Adrian Charles would have been self-employed if he worked directly for ITV or BBC, and he was in business on his own account, which indeed he was. Do you know the only thing that worries me about this case? Unbelievably, HMRC have now appealed. And I've lost track of it. It may have already gone to the tribunal and we're waiting the decision at the upper tier tribunal. I couldn't believe when I heard that HMRC had appealed against this entertainer, Adrian Charles' I-35 case. I feel he will win on appeal. I really do. I wish him every success. I hope this doesn't end up being like Kay Adams, where I always thought she was going to win, but for years they pursued her. She did win repeatedly. It cost her a lot of money, a lot of stress. But as I keep saying, I-35 can be avoided right from the word go if you get the accountant in at the start, quite friendly, quite discussing everything with the TV company or whatever, and you reach a good agreement, a good contract that tells the truth at the very start. Then it's easier to defeat I-35 from the word go. And I've been involved in it for many, many years, very much our subject. We could help anyone at Gravita. Gravita can help you with your I-35 issues, etc., etc. Right, now, I'll have a look at the notes in that area. But it is worrying. And it is worrying, I think, sometimes when big engagers now automatically and wrongly assume that I-35 applies to a contract. And then they notify the personal service company and you have to appeal, and it's not easy. And then you have to get us involved, accountants involved, and it's time consuming. I keep saying, try and get us involved at the very start before things have been officially signed and dealt with. Right, okay, so much to cover. I could have gone on for another hour. If you've got queries today on anything I've said, it's being recorded. Hilary will let you have the recording again and access to it. If you want copies of my report on family investment companies, Hilary can send those to you as well. So reach out and use us here at Gravita. We'd be delighted to help you, not on just today's topics, but other tax topics as well, other tax problems you may have. If you've got an ongoing investigation, Dion would love to help you and assist you, as he's done to many accountants and clients that I've recommended to him over the years. We do have some perhaps more technical webinars coming up over the next few months. And if you look at the screen, a more technical one that I'm presenting is on Wednesday, the 26th of June, company tax computations. I'll make no bones about it. This will be quite a technical one, but I think it'll be one that you'll find very interesting. And I'm sure that many of you advise companies, and we're going to be looking at the topical areas. Can you claim them? Model computation. I think you'll find that very interesting to go through. I used to work in industry. I worked for P&O, the shipping group, in the very early 1980s. I was a part of their tax department. And when you work in industry, it's a wonderful time because there's no timesheets, but you have year end, you have sales of companies, which I was pushed into. I'm going to give you all my current experiences, what the revenue will allow in practice, what you can't claim. So you want to put that in your diary, Wednesday, the 26th of June, company tax computations, the Gravita one there. And then Tom's doing a couple, which I think are going to be really useful. The benefits, pitfalls, and choosing the right route to succession. Succession, didn't I talk about it earlier today? Very, very important. Put the 3rd of July. If you haven't registered for that, I think that's going to be really good. We've got Tom and our accounts partner, Richard Durrell, helping as well and presenting. 3rd of July, I think that's a must as well. And I think you'll have lots of questions as a result of that. Employee ownership trusts, so popular. If you sell your business to an employee ownership trust, there's no capital gains tax. Tom will talk you through that. And also, perhaps a more technical one, a specialist one on the 30th of July, transfer pricing. Big area that. I've been involved in that for years, actually. And everything you need to know, it's a specialist area. It won't appeal to everyone, but transfer pricing is important. And you need to have backup on that. And you need to make the right calls and take the right advice. We can help you with that. And perhaps a more general one towards the end of the summer, Wednesday, the 21st of August. Has the football season started again by then? I believe it will have. What transfers will your team do between now and August? We shall wait and see. But on Wednesday, the 21st of August, I'm doing a business tax refresher and planning course. That course, that webinar on the 21st might last longer than an hour because we've got quite a lot to cover on that course. So you want to put those in your diary if they apply to you, and we are going to limit perhaps some of the numbers on them. So first come, first served, you want to sign up for them. So can I thank you ever so much for watching today? And I'm sure that I planted some thoughts and some seeds into your mind. Can this actress claim these items? Should we approach Gravita for advice on family investment companies? I think you should. When does this social media influencer, when has he or she started to trade and the revenue are hot on it? Perhaps we can help you in all these areas. Reach out to us and we'd be delighted to do so. I'm going to finish there. Have a nice week and I'll speak to you soon. Thank you very much, Hilary and the team behind the scenes for putting on everything today. Enjoy the rest of your day. Bye-bye.